Right, guys, we're almost there. I'm just going to introduce Phil McGilvray from Equifax, and Phil's going to just sum up with a few of his observations of his own. I think we have a draw and a presentation to make as well, and I've got one or two things to talk about afterwards as well. But Phil, over to you.
Great, thank you, Luke. Hi, everybody. So we'll do the fun bit first. So I don't know if any of you noticed on the Equifax stand this afternoon, there was a competition going on the Batak wall. Thank you to everybody who participated. Great bit of fun. It looked too daunting for me, so I didn't partake. So hopefully we have the winner in the room of our bottle of Verve that the glamorous Luke's going to present to you. So I'm pleased to say that Phil has won, but Phil from Smart Search. Is he in the room? Come on up. He's not moving as fast as he did earlier. So congratulations, Phil. When I first saw it, I thought it might be me, but I wasn't brave enough. Congratulations.
Look straight towards me. That's nice. Smiles. We go. Look straight towards me. Here we go. What was just said for me. Once more. Thank you. Make it open.
Cheers. I'm old enough, by the way.
Congratulations. I don't know if you caught that, but he did confirm that he's legally old enough to drink that. So, wow, what a great day. Thank you for your participation. I have to say that it feels like a long time ago that Ryan, my colleague, opened the event this morning. I think if I just quickly recap on what Ryan started with, which was quite sobering in terms of what all of our customers, or many of our customers, are struggling with. More and more families worried about how much their mortgage is going to cost and trying to make ends meet as they pay higher bills that are facing them. When you put the backdrop of that, though, and Ryan's sentiment was that we're positive, we're optimistic, and actually I can confirm that from what I've seen today, that as I speak to many of you, and there aren't many places where you see so many bright minds and the best in the industry getting together, that all of the conversations I've had with you have all ended on one note, which has been optimism of the future. So there's no doubt that there are hard times. The difference today is that there's so much we can do together to help our customers and our businesses through the tough times that we're facing. Whether you work in credit cards, in telecom, in mortgage, in water, the three challenges that keep coming up around the building today remain the same. Regulators expect firms to be proactive and prevent harm. That's new. We heard from the panelists just now about how that's going to change and how we're getting ahead of it. It needs big investment to really understand how different customers and consumers use our products, all the way from when they open those accounts to when they find themselves using them, and also when they may find themselves behind on payments. Second, the state of the economy. Great update earlier where we got a really good understanding of what's happening. It's really making it hard to understand exactly what customers will do today and tomorrow. The squeeze on incomes, surprise spikes in inflation, climbing interest rates, all mean that predicting the future is more complicated than it's ever been. That's filtering through to my part of the business in debt services. Like you, we're starting to see that some people getting into debt and behind on their payments have never been in that situation before, which takes a different lens and will require us to adapt and be very agile. And third, competition is coming faster and stronger, and that's a good thing. That's great. We all love to be on our toes, but you have to make the right decisions to stay ahead. So for that, every conversation I've heard ended on a very positive note. And as Ryan said, we've never been as well equipped as we are today. Firms are leading and learning from each other. But each one is innovating in their own way, and that's been exciting to observe. We're all innovating faster than ever before, and a lot of that is down to the speed of cloud computing adoption. So despite all the challenges we've faced recently, it is great to hear how excited you all are for the future of the market and the future of your firms. I can't think of a better point to end on except to say that Equifax are with you all the way and here to help you stay ahead. Please do come and speak to me or any one of the team. As you know, we're moving on to drinks next, and I can't wait to see you all at the next Credit Summit next year. Thank you again.
Oh, I'm in the way of drinks, aren't I? Thanks, Phil, and thank you to Equifax for being a really good partner for us as well, and I know they're a great partner for many businesses in the room as well, so it's been a delight to work with on the Credit Summit. A few highlights from me. I think one of the things I love about the Credit Summit, there are so many different things to do. Everybody in this room has been on a slightly different journey, so some of these highlights I'm going to read out, I wasn't even there for, but they've been related back to me. So credit cards and buy now, pay later, that's merging into quite an exciting space. It's really kicking off and it's going to carry on doing so. Controversial statement on open banking. It's not made the progress that it should have done. I think we probably all know that, but do we push it along? Data, a quote here from somebody, we need more varied sources, badly. Relief, my relief earlier that when the room emptied, when the diversity in it and diversity and what's the word, God? That word, inclusion. When that room emptied, it was explained that there were genuinely things going on with one-to-one meetings, and that was a great relief to me, and I think probably to everybody. My colleague Tom Parker can't say the word plenary, apparently. And I know that managing the agenda and the timing is very tough. I was told by somebody in the break about an hour ago that the closing remarks were down on the agenda for an hour and 5 minutes from me. Thankfully, it's going to be less than 5 minutes. It was just an agenda change. But trying to manage 110 speakers, 7 streams, it's a hell of a job. So well done to Fee, Akako, Serena, and the rest of our team who've done it effortlessly. The sponsors in the exhibition, the feedback there seems to be really positive. People are talking about having genuinely high-level conversations with people and been very impressed with the seniority and the quality of conversation with delegates. The round tables seem to have been really popular. Faisal Rahman, a Fair Finance premium member who ran one of the round tables, came over and delightedly told me that he didn't really have to chair it. The conversation took on itself and had real energy and real legs, and that's where people are getting real value. I also heard that round tables discussions were carrying on in the lifts and around the building as well. There cannot be collections without recoveries. Frank Horvath, is Frank still in the room? He's probably not, he's not there now. Thirst on stage. It's dry up here. I almost choked when I was talking earlier on, and I think Roma from the FCA was struggling a little bit as well. However, it was nice to hear from the FCA, and I'm delighted that they hold us and this event and our industry in such esteem that we are deemed a pillar event for them. So that's really encouraging. I'm talking to somebody from Barclays who said that they took encouragement from the FCA, that there was encouragement to carry on lending. It's your job to do it. Stretch affordability, stretch, push. AI, the knowledge is not good enough. Be careful. That was the word that came back. And that financial literacy, the age in this country, is believed to be about 11 years old. Consumer duty, I think we've heard a lot about that. There seems to be a lot of scepticism on Slido. But I think Eric Lean does some wise points there. This is the start, the end of the start, not the end of the end, and how that's going to then shape whatever the new CCA is going forward. I asked the question, if you were going to mark the FCA out of 10 for the work that they're doing at the moment, to the panel earlier today. I was being slightly malevolent, and nobody answered it. So I thought that was, but then again, you wouldn't expect the Chief Risk Officer of HSBC to put his neck on the chopping block. So maybe a little bit unfair from me. And final word, I think, for climate risk. When we talked about it earlier and talking about to people during the day, genuinely seems to be an area where we all need to know more, do more, learn more, and spend more time together. So a quick whirlwind tour. thanks for coming. Thanks for being involved. We really love putting this event on for you. I really hope next year we don't have to keep moving things around. I do believe that it feels like that this is coming to an end. It's brilliant having everybody involved, the partners, the sponsors, colleagues, consumers, exhibitors. It's just a fantastic event, and we're delighted to do it. So thanks to everyone, and thanks again to Equifax. And we will see you at the bar. Thanks.